with the gold presentation. So we're going to, sorry?
Maybe just wait for a sec. Yep. Yeah, I think we're good.
Yeah, can I?
Mm-hmm.
Just confirming 2 seconds, guys. Is this all looking live? Everything's fine? Okay, cool. So we are cooking with gas. We've had a couple of technical issues, but I think we're good to go. So we're going to have a look at everything that's going on from the gold market. I think this is going to be a really good holistic deep dive into everything that's going on, both from a currency perspective, the influence that currencies wear on the gold market. We'll have a look at fixed income because that has been a big driver. It's not been so much over the last 5 days, but it feels like we're in this coiled spring type moment. We talked about it last week. We've got some charts which will epitomise that and really show how this all works. But the gold market at the moment, the volume or the move is sideways, and we're expecting something big to happen. Now, is Payrolls this Friday going to be that biggie? I think there's a possibility we could see some big moves in currency markets. The market's not pricing any kind of major marks if you have a look at implied volatility, but we'll have a look at that why. That is why. Okay, so let's have a look firstly in terms of the actual moves we've seen over the last 5 days. The metal or the commodity which has generally had the biggest underperformance has been platinum. You can see here that we've made this lower low coming through, but the RSI has made a higher low, and therefore we've got this divergence which is playing through. The question is will this resolve itself? Will this actually turn to be a reversal sign? We can see this pin bar reversal in play at the moment. Obviously, it's on a daily chart, so it needs to complete. But what we'll look for that situation to play through. But if we actually see the price, if it was to close around here and then that creates a higher high, then we'd be looking XPT USD to potentially move back into this 5-day exponential moving average. But that has been the place where we've seen the underperformance of the 4 metals that we really look in the precious metal complex. In terms of currency performance, because what we do is we always look at the currency performance. We offer gold here at Pepperstone in yen terms, in US dollar terms, in euro terms, Swiss franc, and also sterling, as well as obviously the US dollar. And what we're really trying to understand and pursue, and that's going to be really something that we're focused on this coming week, is that you really want to be looking to be long of gold in what is to be perceived the weakest currency. If you want to be short gold, you can max out that currency effect by looking to be long of gold in what is considered to be the strongest currency. Now, I personally believe that over the next 5 days that we're probably going to see the risks are skewed, that we're going to see a stronger US dollar. If we go into the currency markets here and have a look at what's going on, let's have a look at the dollar index, which is a blend of different currencies, but specifically around the euro. And we'll go into the charts of gold in a second, but you can see here on the daily chart, the dollar index, after Richard Clarida's comments last night from the Federal Reserve, the ISM services number was stronger than expected. We can see that the sellers came in. The market, we saw that bit of information coming through from Richard Clarida. He was a little bit more hawkish than the market was looking for. The market loves to hear what he has to say as the vice chair. He's very much on the core of the board, and his views are now slightly more hawkish than we're seeing from the inner sanctums of the Federal Reserve. Mix that with the strong services number, and the dollar went for a nice ride there. You can see it closed over the previous day's high. These 2 days of indecision coming through in the doji. The dollar's closed higher. Are we now going to get that follow-through buying in the dollar to confirm that? In which case, I think we probably go up into 92.60. So if you're taking long positions, well, if I'm taking long positions in the week ahead and we think that we're going to get a stronger US dollar, then obviously being long of gold in another currency might be beneficial from that P&L perspective. But as I say, we want to be long gold in what's perceived to be the weakest currency in that situation. What is that going to be? Well, let's have a look at euro dollar. Here we can see again, that bearish outside day reversal playing through. Price closing below these 2 sets of dojis, this indecision playing through in the last couple of trading sessions. So what we now need to do is confirming that structure. Can the sellers continue to push this one down and follow through? So the momentum sellers there, if we can get a move through these lows around 118.32, then we could be looking to push back into 117.69. So if I'm taking long positions in gold, and if I feel that gold's going to have some upside, then I'd probably want to be looking at it in euro terms. We can also have a look at it in Japanese yen terms. You can see here dollar yen, another bullish outside day reversal playing through in dollar yen. We're seeing the build through there. So again, this looks like it might squeeze up into sort of 110 and above that. So looking to be long gold in Japanese yen, maybe a better place to be than being long in just generic US dollar terms, because that's what we're going to be looking at. And this Friday, we've got the non-farm payrolls number. I think all the risks personally are skewed towards a stronger dollar. Now, why do I say that? The market's looking for 870,000 jobs in payrolls. They're looking for the unemployment rate to come down 20 basis points from 5.9 to 5.7%. If we take that 870,000 as your kind of guide, I think a number above a million, let's say 1.1 million, it's not out of the question that we see that. Then I think the dollar rallies. I think dollar yen rallies, euro dollar sells off. And then I think that would have a big impact on the bond market itself, which could have obviously impacts on the gold market in a sort of second derivative type fashion. Now, if we were to get a weak number this Friday, let's say we get something to the tune of 650 or below, 650,000 or below, I think this idea of a softer growth patch that people have been talking about, this peak growth, this peak inflation that we've been seeing, I think will manifest itself, and I think the markets will suddenly go. Let's have a look at the 10-year Treasury, for example. You can see this double bottom playing through around 115. I think if we get a break through these levels around 115 on a closing basis, we're talking about 1% on the 10-year Treasury. Now, gold really has traditionally looked at real yields, inflation-adjusted bond yields, but I think we see a situation where if we get through a break of this, the market's going to be saying that it's confirming this growth numbers are falling, and I think equity markets will start pulling back on that. Bond yields have been good for equity markets because they've made the cash flows more attractive from the discounted cash flow models, and they've reinforced tech and all these other factors. But I do believe that if we start talking about 1%, lower growth, lower inflation, that at a time when the Federal Reserve is still talking about raising rates in 2023, that at the time they're going to start tapering, that's a toxic mix for the equity market. The equity market pulls back, and then we start seeing a stronger US dollar. I think Aussie dollar goes down in both scenarios there. So I think that the US dollar rallies in both scenarios, either because it reinforces that a strong number reinforces that we get, the US is the exceptional story at the moment. Bond yields are probably going to move higher. We're probably going to get the 10-year moving up into sort of 125, 130. And I think in that situation, gold will probably struggle. And I think, you'd be looking to trade gold if you wanted to be long in a weaker currency, such as the euro or the Australian dollar in that situation. If we get a weak payrolls number, I think equity markets sell off, and I think we'll probably see bond yields falling as well. But I think as well, money will flow into the US dollar because we get a risk-off vibe playing through in markets. So I see the risk skewed to a stronger US dollar in both scenarios. So that's going to have big implications for our short-term trading of gold. Okay, let's ramp straight into the gold story then, and let's have a look at what we're seeing on the setup. John writes, data yesterday showed employment change of 330,000. Yep, that's true. That was the ADP private payrolls number. The important situation about that is that the ADP private payrolls number has actually had a really poor correlation with the non-farm payrolls number, which we get at 10:30 on Friday Eastern Standard Time. If you actually look at the services ISM number that we saw overnight, the employment subcomponent of that, and remember 70% of the US labour market is made up of service sector. We need to understand that actually expanded, so that kind of offset a little bit from the ADP number. Still, I think that you could say that there are some downside risks based off what we saw from the ADP payroll at 330. That was significantly below what the market was looking for. Yeah, good point there, Barry. But John, sorry, but I think I wouldn't use the ADP as a great guide. It hasn't been traditionally been a great guide going forward. Okay, so let's have a look at the gold market in US dollar terms. So it's in no man's land, no ladies' land, whatever you want to call it these days. But you've got a situation where if you look at the range that we've been trading in, we've got this double top. There's clear supply. I'm just going to start off with the daily chart that we've been seeing here. And we can see that into 1833, you've got clear supply. I'm going to take that down into the hourly chart. Sorry, let's take it into the 4-hour chart so you can just see the level of supply that's come through. And we were looking for about 1840 last week, just to see if price can get up to there. We're obviously looking at this swing high as well that we talked about in the video. And you can see a situation. Yeah, good stuff. Yeah, cheers, Barry. And you can see a situation where there's clear supply playing through into this kind of pink region, 1834, 1830. So again, that just needs to be that situation. Are we going to see another move into that? How is price going to be reacting if we do see a move going up into that level in dollar terms? We've obviously got a lot of support. I mean, crikey, look at the amount of bids that are coming in, the supply, the defense that we're seeing coming through into these low levels if we're looking on the 4-hour chart, which is probably a really good place to see. But let's take it back to the daily chart for that oversight. And again, you can just see, look at the RSI mid-range around 50. So again, this is a range trader's paradise at the moment. How long can this market range trade for? At the moment, it seems that you've got this 20-day, you've got the 200-day moving average moving sideways, the 5-day exponential moving sideways, the RSI 50. I mean, this you cannot get any more textbook of a range trader's market at the moment. So into 1833, we're looking to sell. Into 1795, into this kind of region, we're looking to buy for that continuation of what we're seeing there. I mean, what we can do is we can put a Bollinger Band on this, and we can use just use this again for just sort of short-term mean reversion moves. And again, you can see just how good this is working out when you've got the RSI at 50 and you've got the 20-day moving average moving perfectly sideways. In the short term, 1827 back into this 1794 region seems to be the play. What we can do is we can use the implied volatility in the market, and we can use optionality in your option strikes and look at the weekly straddle price, and we can look at what the break-even levels to buy and sell volatility, and those currently at the moment sit around 1834, 1784. So over the coming week, I would be looking for any kind of moves just to reinforce itself above 1834. I think these are the levels to continue to sell into. Maybe a little bit lower into 1784. We could see a situation where the buyers step in. So it's pretty clear when we're looking at gold in US dollar terms that this is just an absolute range trader's paradise. The question is, when it breaks out, that needs to be reactable. We have to absolutely react to that situation. We can trade the tape, we can trade the price action, but when it breaks out, that is going to be a very powerful affair indeed. So we're respecting the range for the moment. Everything's telling us that these two levels are really worth watching. Now, I suspect if we are going to get a stronger US dollar, then the downside is probably going to be the bigger issue. We know that the world is very much long of US treasuries at the moment. So if we get a strong non-farm payrolls number and a strong dollar, then I think what you're going to be seeing is a situation where bond yields are going to move up. Everyone is long. People are going to cover those longs. It's going to push bond yields up both on a nominal and a real basis, and you're going to see a stronger dollar. So that is the big risk. That's where we see gold moving into these lows, perhaps into 1784, and that's where I'll be looking to take some profits on that short, and that's where I'll be looking to try and look for mean reversion longs in that situation. Now, I talked about the idea that we could see the euro or the Japanese yen being some of the weaker currencies based on what we're seeing in the flow at the moment. It will take a stronger payrolls number, which of course is a big if. I don't like to prophesize and trade around these numbers. But let's have a look at what we're seeing in gold in Japanese yen terms. Now we can see again that just sort of moving, again trading in a bit of a range. Let's put some colouring on there just to really see what's going on. And again, we can just see this just hovering in a range as well. So I think a break of this 19,000 or 197,100, this is in yen, remember, a downside break of that, then that would reinforce the idea that we're probably going to see a strong yen. Maybe that comes with high volatility in the market, and maybe that can start trending back down to this 200-day moving average. My best guess, though, if we're going to see a stronger dollar yen and we're going to see fairly unchanged bond yields, is that we could see a move back into these levels here. What are we going to see on the euro one, though? Now that's an interesting one. Again, just some consolidation playing through. So no clear trade playing through in euro terms. Aussie dollar gold looks really interesting as well, though. We've got this double top in place. Look at all these pin bar reversals playing through. you can see the market obviously finding really big supply into around 24.80. We see follow through selling every single time. The big level that we need to see, if we do see a stronger Australian dollar or we do see gold falling in Aussie dollar terms, whatever the situation is, the big level to watch is around these kind of lows around 24.30. If we get a break of those levels, then this double top comes into play and we're looking for around 23.90. So the trade's not there yet. Put it on your radar, because if you're going to see a situation where it breaks through this double top neckline, the Aussie dollar gold price is going down into 2,300 or below 2,400, and perhaps down into this sort of 200-day moving average. That's a really nice little setup. We can see clear supply there. We've got the neckline into 24.30. If it breaks that level in the week ahead, that's a trade that I'd like to jump on as well. So a really interesting situation that we've been seeing playing through. But in terms of gold, going back into that US dollar terms, it is range trade that we've been seeing. Now let's have a look at some of the other factors that are playing through. We've got the technical situation. And price is true. When you've got so many factors that are all feeding into price, it's really all about flow at the end of the day. When everything's feeding into this situation, let's have a look at some of the other trading dynamics that we're looking at. Okay, the first one which I like to look at is the range. Now what I've done here is I've used the logic of taking the high and I've subtracted the low, and I've used that number and divided it by the previous day's close. What I'm trying to do is I'm trying to understand what is the range. What is the range that we've been seeing? Now, of course, you can use historical volatility or realized volatility or implied volatility, and I like to use implied. But what we do as traders is we're encapsulated in that whole 24-hour period, that whole 24-hour range, and that's what this chart tries to tell me. What has been the range that we can use average true range on the chart, for example, and we use that for our stop losses and other factors. But I like to understand how big the range has been. And while we've got realized volatility at very, very low levels, which you can actually see from this orange low level here, this is the 20-day realized volatility, which I can explain in another webinar how realized volatility is calculated. But what we can actually see here is that 5-day, it's a 5-day exponential, a 5-day moving average here, is that the actual 5-day volatility or 5-day range moving average is actually at the lowest level since around 2020. But recently we've seen a little bit of a pickup in the daily ranges. We certainly saw that last night. But generally, as you can see, if we blend that out for a 5-day moving average, that volatility in gold is at pretty low levels. There's some movement intraday within the bars, but generally, if we break it down, we can see that volatility is pretty low. The question that we're asking, and we've been talking to clients about, is this the calm before the storm? And are we ready to see a breakout of this range with expanded bars, which of course is going to have big ramifications, not just for the risk that we're taking on, but obviously our position sizing as well? Or are we going to see the continuation of these fairly sleepy, fairly calm conditions playing through? Personally, as a trader, I like to see wider range expansion, regardless of the time. I like to trade off 4-hour charts, sometimes going into the hourly charts. I'm not a scalper, but I like to trade the price action and have a fundamental strategy attached to that as well. But people who are scalping, obviously, the range bars and everything that you've been seeing there are very, very interesting indeed. So we've seen that. Let's have a look at positioning. I've used the Commitment of Traders report that comes out, that is compiled by the market. Everyone who's holding futures position, managed money, will pass that on, and you'll see a situation where they will report their net, their long positions and their short positions. And what we do then is then compile that to a net position. And you can see here that managed money are holding a net long position. You can see around 110,000 net long contracts. It is long. The market is long of gold, but it's not extremes. There's no extremities that we're seeing through whatsoever at all. So if we were to see a continued move up, it's not based on extreme long positions. As you can see back here in 2019, that's when we were talking about. That's when we were talking about a market that was very, very long of gold. At the moment, we're long, but we're not overly long. If we have a look at the options market, which I think is the best barometer of sentiment towards the gold price, as you can see here, what I'd actually focus on is the orange line, or the gold line per se, which is actually looking at what we call risk reversals. And we're looking at the skew or call volatility on 1-week options, and we're minusing or subtracting 1-week implied volatility of puts. If that's moving higher, it's telling you that there is a bigger propensity to come out and buy upside calls in gold relative to downside, or people are expecting bigger moves to the upside than downside. It's a great barometer of sentiment playing through, and you can see there that the market is somewhat positive of calls relative. There is a slight premium, and you can see here on 1 month that there's about a 0.5%. Well, implied volatility on calls is about half of volatility higher than puts. In layman's terms, the market's pretty neutral, which is probably a reflection of what we're seeing in the price action, but the cost to buy calls is more expensive than puts, or the movement in calls is expected to be more than puts. So I think that's a really interesting situation that we've been seeing. Okay, I'm going to wrap it up because we've done our 10 minutes. I'm just seeing if anyone's got any questions in the chat room. Do I consider divergence on volume as well? I don't. I mean, I think there's a million ways that you can look at divergence, but generally, I would look at divergence, on the RSI or stochastic or the MACD relative to price. That's always been pretty good, especially when you get triple divergence. I think the problem, I think it's okay when you're using things like gold futures. When you're using OTC volumes, I think it's very difficult to do because they're not always reflective of everything you've been seeing. But I think, if you're using volumes from the futures, I think that can be quite interesting to do. Maybe that's something we could address next week as well. Okay, just seeing if there's any other questions coming through. Great stuff. Thanks, Barry. Appreciate your call and yours, John, as well. All right, we're going to wrap it up there. I really do think that the interesting thing about the gold market in the short term, we found this really nice range, which we've talked about as well. Just to surmise, we want to be long. If you're taking long positions in gold, you're going to get more bang for your buck by doing it in the weakest currency. So what is the weakest currency? We don't know yet. But the chances are that, for me, it's looking like it could be the euro or potentially the Japanese yen, but probably more so the euro. We've seen a really nice little setup in Aussie dollar gold. We've got a really nice double top with a neckline that we're going to be looking at. When that completes, we'll probably go to the Telegram channel and we'll probably put that chart out for people to talk about that situation. Maxwell from South Africa, where is gold leading to? Well, we've just covered that, and just for people who are coming in late, we've got this great, range traders paradise I've talked about. Everything. You've got the RSI mid-range, you've got the 20-day moving perfectly sideways, you've got the 5-day moving perfectly sideways. It feels like a coiled spring. Which way is it going to go? We don't know, but that's why we react and not always prophesize. And I think when you can get a break of that range, it will be powerful. And I don't think it's going to be a one-day affair. So at the moment, I continue to like trading the range and looking to look to average into longs into these lows, look to fade markets into those highs. But if it broke through those levels, I'll be quick to take the loss. And I'll be looking to flip that into longs to trade that new potential breakout. If it does come, it could be very powerful, whether you're looking at longs or shorts in that situation. So that payrolls number that we've got this Friday, it feels like the dollar's going to win either way. If we get a pull down in stocks because of poor numbers, I think the dollar goes bid because of its safe haven quality. I think the Japanese yen will probably do quite well. If we get a really strong number over 1 million, then I think you're probably going to see the dollar working quite nicely. And again, that could have big implications. I think you're probably going to see gold trading lower. And I think you probably want to be looking on a strong payrolls number. And if you've got an open mind and are happy to trade gold from the short side, I think gold in US dollar terms could be on the short side, could work quite well on a strong payrolls number. So trade safely. We'll come back this time next week. Hopefully go really, really smoothly. And if you've got any questions, do leave them in the comments field or do reach out to me on Twitter, ChrisWeston_PS. I'll be happy to meet those. But we'll come back next week and review some of these ideas and some of these trades. Thanks very much for watching.